Welcome to Flexi Staff Cover Training from Simply. This training course will give you everything you need to understand the product and sell it with confidence. Flexi Staff Cover is Simply's group insurance product for employers, offering their employees life, disability, critical illness, temporary income protection, and funeral. Let's get started. Flexi Staff Cover is a group insurance product that employers buy for their employees. It has 5 benefits that can be mixed and matched in real time. No paperwork, no waiting. Life cover pays a lump sum on death, up to 2.5 million rand. Occupational disability pays a lump sum for permanent inability to work. Critical illness pays a lump sum on a qualifying diagnosis. Temporary income protection pays a monthly income during short-term inability to work, up to 100,000 rand a month. And funeral cover pays for funeral costs for the employee and their family, up to 100,000 rand. Each benefit can be switched on or off individually. The employer decides what to include and how much cover to provide. Part 1. Life cover. In this section, we'll cover what life cover pays, who qualifies, what the exclusions are, and how to position it compellingly for your clients. Life cover pays a lump sum to the nominated beneficiaries when they die. Here's a powerful way to frame it for clients. Imagine if one of your employees passed away today. Their family could be financially devastated. Simply staff cover means that family receives a meaningful lump sum to keep the household going, keep food on the table, and children in school, often for less than 100 rand per employee per month across all 5 benefits combined. Key facts to know. Cover is paid to nominated beneficiaries into a South African bank account. Maximum cover is 2.5 million rand. There's also a terminal illness accelerator. If an employee is diagnosed with a terminal illness and expected to die within 12 months, they can claim the benefit early. If the terminal illness benefit is paid out, only the life cover benefit falls away. The employee can still claim on disability, critical illness, and funeral cover. Pre-exclusions apply to groups of fewer than 20 staff for the first year. Key rules and exclusions. A few important rules brokers must know. The pre-existing condition exclusion applies to groups with fewer than 20 employees. For the first year, claims related to a condition the employee was aware of, had symptoms of, or received treatment for in the 12 months before cover started will not be paid. Claims that will not be paid include suicide or self-injury within the first 2 years, participation in terrorism, riot, or war, criminal activity including drunk driving, refusal of recommended medical treatment, and hazardous pursuits. Cover amounts range from 50,000 rand minimum to 2.5 million rand maximum, capped at 5 times annual salary for salary-linked structures. Employees must be between 18 and 64 when added, and cover terminates at age 70. Now, let's look at the next benefit, which occupational disability. This is a lump sum benefit for employees who are permanently unable to work. We'll consider what it covers and the key rules of the benefit. Occupational disability cover pays a once-off lump sum when an employee can no longer do their current job or any other suitable job permanently. Unlike temporary income protection, which covers a short-term inability to do your specific role, occupational disability is about permanent incapacity assessed against the employee's education, skills, and broader work experience. Here's how to explain it to a client. Imagine a serious accident or illness that prevents you from ever working again. Occupational disability cover pays you a lump sum, once-off payment to help you rebuild your financial life. Key rules. It's a lump sum, paid once. It requires life cover to be in place. The benefit must be equal to or less than the life cover amount. There's a 1-year pre-existing exclusion period. There's a 6-month deferred period before payment begins. Permanent disability means the insurer determines the employee can no longer do their current job or any other suitable job, taking into account their education, skills, and experience. This is a stricter test than temporary income protection, which only looks at the current role. Cover amounts are minimum 50,000 Rand and maximum 5 times salary linked, or 6 times lowest earner salary fixed in with overall cap of 2.5 million Rand. Cover cannot exceed the life cover selected. The pre-existing condition exclusion applies to all groups regardless of size. That is, a 1-year exclusion for any condition treated in the 12 months before cover started, even if disclosed during underwriting. And remember, the benefit only becomes payable 6 months after the disability began. It's important, especially for older clients, to realize that the occupational disability benefit reduces by 20% per year during the 5 years leading up to the company's normal retirement age or age, 65, whichever comes first. At age 60, the benefit is at 100%. By age 61, it's 80% age. 62, 60% age 63, 40%. Age 64, 20%. And at 65, it terminates completely. This reduction applies to occupational disability only, not to temporary income protection, life cover, or funeral cover. If an employee joins the policy already over 60, their cover starts at the reduced level from day one. Make sure that clients with older employees understand this when setting cover amounts. Temporary income protection, or TIP, is a valuable benefit. Let's look at what it pays and the exclusions you need to know. Temporary income protection pays a monthly income, similar to the employee's normal salary, while they are temporarily unable to work. Here's how to explain it to a client. What happens if you get sick or need an operation and you can't work for 3, 6, or even 12 months? Your employer stops paying. But your bond, your groceries, your school fees, they don't stop. Temporary income protection fills that gap. It's not forever. It pays for a set period, 6, 12, or 24 months, chosen by the employer at inception. The money is paid tax-free directly to the employee. Key facts to highlight. It pays monthly, not as a lump sum. There are 3 payment terms. There's a deferred period of 1, 3, or 6 months before payments start. It stops if the employee returns to work or turns 65. And it requires life cover. It's not a standalone benefit. The benefit is based on a percentage of the employee's salary, and there are 2 options. The employer chooses one option for the whole group. Option 1 is a tiered percentage of salary, 80% of the first 10,000 Rand, 65% of the next 20,000, 60% of the next 30,000, and 50% above 60,000. For example, an employee earning 15,000 a month would receive 11,250 Rand. Option 2 is a flat 75% of monthly salary for all employees, regardless of salary level. This one is simpler to explain and administer. Important caps to note. The benefit cannot exceed the employee's actual take-home pay. The maximum is 100,000 Rand per month. If the employee has other income cover, the total is capped at take-home pay. It must be taken with life cover, and it stops at normal retirement age of 65. There are 2 concepts that the client needs to understand. First, the deferred period. This is the waiting time before payments start. The employer chooses 1, 3, or 6 months. Critically, the deferred period counts inside the total payment period. So if the employer selects a 12-month payment term with a 3-month deferred period, the employee waits 3 months, then receives 9 months of payments, not 12. A longer deferred period means fewer actual payment months. The second thing to note is that the employee can claim again after recovering, if they become ill again less than 6 months after payments stopped. When this is the case, the deferred period is waived and payments resume immediately. But the payment period does not reset. A new claim can only start fresh after 6 months from the end of the previous benefit period. Be honest with clients about what temporary income protection does not cover. Pre-existing conditions are excluded for 1 year. Anything the employee had, showed symptoms of, or was treated for within 12 months before cover started. the employee must be completely unable to perform their specific job duties. Partial inability does not qualify. No benefit is paid for attempted suicide or deliberate self-injury, ever. Participation in war, terrorism, riots, or civil unrest is excluded. Radioactive exposure or nuclear events are excluded. If a registered doctor recommends treatment and the employee refuses, no benefit is paid. Cover stops completely on the employee's 65th birthday, even if they're still employed. And unlike life cover, TIP does not offer accidental-only cover above the free cover limit. Now, let's move on to the next benefit, critical illness cover. This benefit pays a lump sum when an employee is diagnosed with a serious qualifying illness. Let's look at what it covers, the severity levels, and the key differences between the core and comprehensive options. What is it? Critical illness cover pays a lump sum directly to the employee upon a qualifying diagnosis, cancer, heart attack, stroke, and more. Here's how to position it for clients. Imagine a cancer diagnosis. The hospital bills are one problem, but what about the bond, groceries, and school fees? Critical illness cover pays the employee directly, and they decide how to spend it. Key facts. It's tax-free and can pay out multiple times, up to the total of the sum assured. Clients need to take out life cover in order to get critical illness cover. There are two options, core and comprehensive. There's a 2-year exclusion period for pre-existing conditions, and importantly, the employee must survive for 28 days after the diagnosis to claim. If they die within 28 days, only life cover pays out. Your clients will need you to explain the difference between the two critical illness options. The core option covers 11 conditions and only pays when the illness reaches severity B or higher. 0% for severities C and D, 75% for severity B, and 100% for severity A. It's the affordable option for clients who want protection against only the most severe outcomes. The comprehensive option, however, covers 24 conditions and pays across all 4 severity levels. 25% for severity D, 50% for severity C, 75% for severity B, and 100% for severity A. This is often the right choice for clients who want broader protection, including earlier stage cancer diagnoses and less severe cardiac events. The core option covers 11 major conditions: cancer, stroke, heart attack, coronary artery bypass, kidney failure, respiratory failure, major organ transplant, paralysis, blindness, coma, and severe burns. The comprehensive option adds 13 more: heart valve surgery, aorta graft surgery, cardiomyopathy, liver failure, loss of 2 limbs, loss of speech, motor neurone disease, Parkinson's disease before age 65, advanced dementia, or Alzheimer's before age 65, multiple sclerosis, severe ulcerative colitis, lupus, and accidental head injury. When presenting this to clients, emphasize that comprehensive covers a broader range of diagnoses. Payout amounts depend not just on the diagnosis, but on how severe the illness is. At the time of claim, using cancer as an example, severity A, the most severe, like stage 4 cancer, pays 100% under both core and comprehensive. Severity B, significant spread like stage 3, pays 75% under both options. Severity C, early invasive cancer, like stage 2, pays 0 under core, but 50% under comprehensive. Severity D, a very early stage, like stage 1, pays 0 under core, but 25% under comprehensive. This is the most compelling argument for recommending comprehensive cover over core if it is affordable for client. Early detection is more common today, and comprehensive is the option that rewards it. What is not covered needs to be disclosed to clients upfront. Pre-existing conditions are excluded for 2 years. Any illness the employee had showed symptoms of or was treated for in the 12 months before cover started. Under core and comprehensive, early stage cancers including carcinoma, eye situ, non-melanoma, skin cancers, and low Gleason score. Prostate cancers are not covered. Critical illness cannot be held without life cover. If the life cover is cancelled, the critical illness cover is cancelled too. The critical illness benefit can never exceed the life cover amount. The 28-day survival rule applies. Death within 28 days of diagnosis means only life cover pays. Parkinson's and dementia are only covered before age 65, and all critical illness cover terminates at age 65, even if the employee is still working. How much critical illness cover a client can get is linked to the employee's salary and the life cover selected. For salary-linked structures, the maximum is 3 times annual salary. For fixed benefit structures, it's 4 times the lowest earner's annual salary. The hard cap is 2.5 million rand, and the benefit can never exceed the life cover amount. The minimum cover is 50,000 rand. Free cover limits, where no health questions are required, increase with the size of the group. 0 for 1 to 4 employees, 50,000 for 5 to 9 employees, 500,000 for 10 to 49 employees, 1 million for 50 to 99 employees, 1.5 million for 100 to 149 employees, and 2 million for 150 or more employees. Above the free cover limit, health declarations answering health questions are required. If an employee has health issues, cover stays at the free cover limit. And unlike life cover, there's no accidental-only option above that limit for CI. Here's how to help clients understand the difference between critical illness and temporary income protection. Critical illness pays a lump sum when a severe illness is diagnosed. Temporary income protection pays a monthly income when the employee is temporarily unable to work. Critical illness is once off. Temporary income protection is ongoing for 6, 12, or 24 months. Critical illness pays on a qualifying diagnosis. Temporary income protection requires complete inability to do the job. Critical illness has a 28-day survival period. Temporary income protection has a deferred period of 1 to 6 months. Both stop at 65, both are tax-free, and both require life cover. The main difference, critical illness is about a health event and financial resilience. Temporary income protection is about replacing income while you're off work. Here are 6 questions you'll probably get asked and some tips on how to answer them. 1. I already have medical aid. Why do I need this? Medical aid pays the doctors and hospitals. CI and TIP pay the employee for the bond. Groceries, school fees, very different purposes. 2. What if I had a pre-existing condition? It's excluded initially for CI. No claim for 2 years. For TIP, 1 year after that, you are covered. 3. What if my cancer is early stage? On core, you may get nothing on comprehensive. Even early stage cancers pay 25 to 50%, a key argument for upgrading if you can afford it. 4. What if I can still do some work, just not my full job? For TIP, the employee must be completely unable to do their specific role. Partial doesn't qualify. 5. What happens to my CI cover if I leave my job? Unfortunately, CI cover and temporary income protection cannot continue after you leave employment. Unlike life and funeral cover, it falls away immediately. Tell clients this upfront. 6. How does it work with multiple critical illness claims? Here's an example. If an employee has comprehensive CI and gets diagnosed with stage 1 prostate cancer, they get paid out 25%. If the cancer then progresses to stage 3, 75% payout. Because they were already paid out for the same condition, they will receive 75% minus 25% already paid out. However, if they were later diagnosed with stage 3 stomach cancer, which is not related to the prostate cancer, then they will get the full 75%. Then the benefit will end because they would have been paid out the full 100% in total, 25% prostate and 75% stomach. Here are a few tips for selling these benefits effectively. 1. Know the group size. It determines free cover limits and whether health questions are needed. More employees means higher free cover and simpler onboarding. 2. Use real RAND examples. A stage 3 cancer diagnosis on comprehensive with 500,000 Rand cover pays 375,000 Rand, enough to cover a bond for 3 years. Make it tangible. 3. If it's affordable for the client, consider comprehensive cover for lower income earners. Even smaller payouts at early stage cancer detection can be life-changing. 4. Temporary income. Protection and occupational disability work together. The disability benefit has a 6-month deferred period. TIP can bridge that gap. Recommend them as a pair. 5. Always disclose exclusions first. Clients with pre-existing conditions need to know upfront. Honesty now prevents disputes at claim stage and protects your reputation. 6. Remind the employer. They select the options and pay the premiums. Employees receive cover as a workplace benefit. Help the employer understand the value they're creating. For quick reference, let's go over it again. Critical illness cover requires life cover, 28-day survival rule. Core covers 11 conditions. Comprehensive covers 24. Core pays 75 to 100%. Comprehensive pays 25 to 100. 2-year pre-existing exclusion. Maximum of 3 times salary, the life cover amount, or 2.5 million, whichever is less. Minimum 50,000. Stops at 65. Tax-free payout. Temporary income protection requires life cover. Monthly payments only. Payment terms of 6, 12, or 24 months. Deferred period counts inside the total term. Employee must be completely unable to do their job. Benefit is a tiered percentage or flat 75%. 1-year pre-existing exclusion. Capped at 100,000 Rand or take-home pay. Stops at 65. Tax-free payout. Now, let's move on to the last benefit in Flexi staff cover, funeral cover. This is often the most relatable benefit for employees. In this section, we cover what it pays, who it covers, the 2 options, payout amounts by family member, and the added value features like body repatriation. Funeral cover pays a lump sum to help the family cover funeral costs without scrambling for money at the worst possible moment. Here's how to explain it. A funeral costs between 15 and 100,000 Rand. Most families don't have that sitting in their bank account. Funeral cover pays quickly, so the family can focus on grieving, not finances. There are 2 options. The family funeral option covers the employee, their spouse, and children under 21. It includes a stillbirth benefit of 5,000 Rand after 26 weeks of pregnancy, a premium waiver of 6 months if the employee dies, and the ability to add children after the policy starts. The member-only option covers the employee only, a simpler, lower-cost option that pays to the first listed beneficiary. The payout amount depends on who passed away and their relationship to the insured employee. The main member or spouse receives 100% of the cover amount. A child aged 14 to 21 also receives 100%. A child aged 6 to 13 receives 50%. A child aged 0 to 5 receives 50%, capped at 20,000 Rand. A stillborn baby after 26 weeks receives a fixed 5,000 Rand benefit. Under the member-only option, the employee's death triggers 100% of the cover amount. Keynotes to remember: maximum cover is 100,000 Rand for the main life, spouse, and children over 14. Minimum is 5,000 Rand. Family members must reside in South Africa. The beneficiary can request that the payout goes directly to the funeral parlor. There are 2 valuable added features that help differentiate this product. First is the premium waiver. If the main member, the employee, dies, the spouse and children keep their funeral cover for 6 more months at no cost. This gives the family time to arrange alternative cover without a gap in protection. Second, body repatriation is included in both funeral options and covers the return of remains within South Africa for all covered lives, up to 20,000 Rand per year per policy. For the employee specifically, this extends to SADC countries, including Namibia, Botswana, Zimbabwe, and Mozambique, up to 50,000 rand per policy. Services within South Africa include locating the deceased, overnight accommodation for next of kin, referral to undertakers and pathologists, and counselling referrals. SADC services cover storage, embalming, a zinc-lined casket for air transport, and all documentation and cargo fees. Free cover means that no health questions required up to this amount. Employees are automatically covered up to this free cover limit for cover. That is more than this. They must answer health questions for the excess amount for life, critical illness, and occupational disability. Groups of 1 to 4 have no free cover. 5 to 9 employees, 50,000 rand, 10 to 49, 500,050 to 99, 1,100,000 to 149, 1.5 million 150 or more, 2 million for funeral free cover, 5 to 9 employees, 50,000, 10 employees and above, 100,000 for temporary income protection. Free cover only kicks in from 20 employees upward, starting at 25,000 rand per month. Important note, there's a 6-month waiting period for the spouse and children under the family funeral benefit. This may be waived if the new policy replaces equivalent cover this. Let's look at a summary of all 5 benefits. Life cover pays a lump sum to beneficiaries on death, stops at age 70, with a 1-year pre-existing exclusion for groups under 20 staff. Occupational disability pays a lump sum to the employee on permanent inability to work, stops at 65, reducing from 60, with a 1-year pre-existing exclusion. Critical illness pays a lump sum on a qualifying severe diagnosis, stops at 65, with a 2-year exclusion. Temporary income protection pays a monthly income for temporary inability to do the job, stops at 65, 1-year exclusion. And funeral cover pays a lump sum for funeral costs on the death of the member or a family member. The member is covered to age 70, children to age 21, with a 6-month waiting period. Use this slide as your go-to reference when comparing benefits with a client. This is your consolidated reference for cover limits. Life cover, minimum 50,000 rand, maximum 5 times annual salary linked, or 8 times lowest earner salary fixed, capped at 2.5 million. Occupational disability, but cannot exceed the life cover selected, capped at 2.5 million. Critical illness, 3 times salary linked, or 4 times lowest earner salary fixed, capped at the life cover amount, and 2.5 million. Temporary income protection, always a percentage of monthly salary, capped at the lower of take-home pay, and 100,000 rand. Funeral, 100,000 for the main life, spouse, and children over 14. 50% for younger children, minimum 5,000 rand. It's important to remember that Simply applies maximum cover on a consolidated basis across all Simply policies. This means that the insured person's total cover across all policies combined cannot exceed these limits. Here are some things to note about Simply's Flexi staff cover policy. Let's start with eligibility. To qualify for Simply staff cover, there must be a verifiable employer-employee relationship, confirmed by a payslip or employment contract. Employees must be between the ages of 18 and 64, though cover for life and funeral benefits only can extend to age 69, provided the employee was on the policy before age 65. Employees must be on a permanent contract or a temporary contract of at least 6 months and working a minimum of 20 hours per week within South Africa. They also need to be actively at work on the day cover commences, meaning fully present and able to perform their normal duties. Employees on sick or disability leave will need to either provide proof of good health or complete 8 consecutive weeks without absence before cover can begin. And of course, all employees must be legally authorized to work in South Africa, with a valid work permit and passport. Now, which employees need to be covered? This is an important point for your clients to understand. The policy must cover all eligible employees with a minimum participation of 80%. Alternatively, it can cover all employees within a clearly defined group, such as all call center agents. Neither the employer nor the individual employee has the option to opt out. What about adding employees or increasing cover later on? Adding new employees is compulsory and must be done at least 1 week before the next premium due date. Your clients can do this through the self-service portal, via you as their broker, or automatically through payroll integration. Standard underwriting rules apply from each employee's individual start date. When it comes to benefit increases, these must apply across the board, not to selected individuals. The increased portion is treated as new cover, which means health questions may apply, and a new pre-existing condition exclusion period will apply to that additional amount only. Existing cover remains unaffected. One exception worth noting, increases driven by salary changes are exempt from these requirements. Finally, let's talk about policy renewal. The policy renews automatically on the 1st of June each year. At renewal, premiums are reviewed and adjusted based on the group's risk profile, taking into account age mix, gender mix, claims experience, and any regulatory changes. Either party can choose not to renew. If premiums are set to change, at least 60 days notice will be given, giving the employer the opportunity to accept the new terms, adjust their benefits, or cancel the policy. Here you can see Simply's full product matrix. It's also on our website. Here you can find the complete breakdown of all Simply products, with cover minimums, maximums, eligible ages, and requirements. This is a great resource when a client asks about product details. To close out, here's the 6-step sales process. Step 1, needs analysis. Understand the employer's workforce, their risk profile, and what benefits matter most to them. Step 2, generate a quote. Use the advisor portal at advisor.simply.co.za to get an instant live quote and use real-time sliders to adjust cover and prices. Step 3, discuss. Walk the employer through the options available, the costs, and the value. Step 4, let the client decide what benefits they want for their staff. The entire process is paperless and handled online, so they can sign up right then and there as they sit with you. Step 5, instant decision. No waiting, no underwriting delays. When the client is comfortable with their choice, they will receive an OTP that you submit as confirmation of their choice. Step 6, the policy is in force. Employees are instantly covered. This is one of the fastest and most straightforward group insurance products to place. Policy documents will be sent via email and beneficiaries collected via SMS and WhatsApp. Congratulations, your client now has cover.